The one and only Vijay Kedia, founder, Kedia Securities. And Ritu Arora, CEO and CIO, Asia Pacific, Allianz Investment Management. Like the previous session, there will be two very stellar and able moderators for this one. We have V. Keshav Dev from Fortune India, and of course, Saurabh Majumdar, our editor-in-chief at Fortune India. Huge round of applause, please. And for those of you who've just walked in, please may I request you to keep your phones on silent and avoid much movement in the room once this fantastic session begins.
Good evening, and thank you very much for being with us this evening on a busy day, particularly busy after this blockbuster budget which we saw over the weekend. Lots and lots of fine print still to be deciphered, still being deciphered. But we are here joined today by three very, very sharp minds who will help us not just talk about the budget. The budget is one part of that journey. But as the subject of this session says, it's the journey towards Viksit Bharat, or a developed India, by 2047. So we will go into a lot of these aspects over the course of the next few minutes and ask our panelists what are the challenges and the opportunities for India at a time when we see a lot of new and interesting developments coming in from the United States. So, of course, that we will ask some of our panelists to sort of decode for us. And that's not easy to decode. However, I will start first with Barnik in terms of looking at the broader picture, Barnik. The economic survey was quite, has talked about a lot of interesting aspects. And one aspect which we have discussed earlier also in various forums is whether an 8% year-on-year growth is possible or achievable in this journey towards Viksit Bharat, because without that, it's not going to be really possible to do what India wants to do. So over to you for the first comments.
So let's start with why the magic figure of 8%, right? I don't think there is obviously some logic behind it. I think what is really important is for us to become a middle income country and not even a rich country. We have to get our per capita income up, right, to around $13,000, $14,000, $15,000. This today is just $2,500 to $2,600. If you work backwards, I think that means our per capita income has to roughly grow at 8% plus per annum. So if you put that in the backdrop, we have to grow at 8%, if not more, to achieve the Viksit Bharat dream. Now, is it possible, right? Now, again, I don't want to do too many comparisons, but if you look at China, right? China has spent nearly 2 decades growing at close to 10%, if not more, right? So if people have done it, I think there are countries like China which have achieved it. Now to do it year on year over 2 decades, which is what the vision lays out, is reasonably hard. And to do that, we need to have all engines of the economy firing, right? And for me, again, as an investor, I would just categorize it into 4 broad engines. There is domestic consumption, which there was a discussion on in the last panel. Secondly, there is investment. Public investment, which I think the government has done a great job and is now roughly stabilizing at around 3.1% of GDP after doing a little bit of bump over the last couple of years, which is very good news. Third is private capital formation, notably investments from domestic enterprises, but even more importantly, FDI, which I think the story is still playing out. And fourth is exports, right? So I think for us to get to 8%, all of these engines should be firing concurrently. And the challenge we have is not all of them work together. At least in this budget, one of the engines was given adequate attention for us to get to 8%.
Ritu, I'll come to you. The 8% discussion which we asked Barnik, and I want your views from a global perspective. With increasing global headwinds, what are the kind of challenges which you think India will face, and what are the kind of sort of areas in which we need to focus to reach that 8%. If at all 8% is a magic figure, but basically asking you what are the key areas which we need to look at in terms of achieving that growth objective.
Thanks. It's a great way to open this discussion. It is indeed a very important destination that we are working towards as a country. Personally, I would not overemphasize on 8%. I'm quite convinced that India is definitely poised to be a very large global economy. So it's not a matter of if, it's only a matter of when that 8% or a plus and minus 1-2% there defines. So the journey is well laid out, but it is a journey which is unprecedented in some ways. While yes, China has done well, and I completely concur with you that it has been done before. In fact, the economy doubled every 3 years. So once it's on that kind of a growth trajectory, that is how we have seen it playing out. Will it play out like that for India? One cannot be sure, because a lot of things have changed since, especially geopolitics. We have a very dynamic leader in many parts of the world, especially US. The growth momentum that we have in India will have to be tempered by these global headwinds, as you're pointing out. But I think the mix is pretty much there and right at this point in time. The few pillars, as you rightly pointed out, be it investment, be it consumption, be it demographics, are all falling in place. And I think the earlier panel talked about technology and skill development. With that as an added ingredient, we are surely on that path. I remain quite confident that we will have. Will it be 45, will it be 47 or 49? One can debate, but very much on that trajectory.
Vijay, I know you are more like a bottom-up investor, but let me just force you to make an opening remarks on the macro perspective and where we sit today, and in the context of the budget. What do you think, where are we headed?
No, of course, like I feel, in my view, I don't think that we have any challenges in achieving a 8% or whatever GDP target, what people are talking. Because I evaluate in this way, like even after 1990, I don't think there had been any year, forget about this COVID and the Lehman Brothers crisis and all, when India actually did not grow more than 5%. So it is like a student who has a habit of achieving 60-70% marks in every examination, so that it comes into its DNA. So I think so far this 8% is concerned, I think it is quite achievable. But let me tell you, if you are talking about this Viksit Bharat and $30-40 trillion economy by 2047, I think this 8% GDP is not going to take us to that level. For that, we have to rise, more.
No, in fact, I think that there was a commentary from the government also that some years it will be higher, some years we may fall behind, but overall there will be an average of growth of that level or more. Now, the other point, which of course is an elephant in the room, and I will, we wanted to get your views on that, is we talked about technology in the previous panel. One big I would say imponderable and a positive as well is AI. How does India look at AI, and is it a boon or a bane is what has been discussed. We know that AI is now as sort of ubiquitous as computerization, digitization, or whatever you call it. But how does AI fit into the ambition? Because now we've just recently seen the government also do a lot of work, initial setting up of the AI mission and all of that. So what are your views on the AI part of the Viksit Bharat dream? I'll start with you again.
Sure. AI is a great enabler, a great disruptor as well, and we are seeing it in our day-to-day life. It's touching every aspect of our being, and it's kind of a bazooka, kind of a speed that we are experiencing over the last year or so. Even a common man on the street now understands and is talking of AI. To the question you posed, even the global leaders have put out their statements with all the what we saw unfolding over the last couple of weeks with DeepSeek, etc. Clearly, AI is a game changer. But like, I was reflecting back in early years when we were just coming into workforce, there was this whole discussion about computerization and how computerization will take away jobs and all the youth who were coming out of colleges, which was me at that time, would be left with fewer jobs. But what probably happened was more value-added jobs. What happened was, rather than doing reconciliation, bank staffs could do a better customer focus, could design innovative products. Personally, I think AI will be a multiple function of that, but it is an enabler. And as an investment personnel, I see it in all aspects, be it my trading, investment decision-making, portfolio optimization, where we spend tons and tons of man-hours trying to collate data, trying to forecast. It's become a matter of minutes and seconds, and that's a huge enabler, because that will lead to innovations, it will lead to customization, it will lead to bespoke solutions. It will only aid, in my industry, financial inclusion. So I'm super excited, trying to keep pace.
Ritu, just want to add to that. I mean, you invest in across markets, including China. But do you think China has taken the game away from India, at least in terms of AI, and what DeepSeek has done?
In a marathon, you can't say in the first lap who's going to win the marathon, right? And this is for sure a marathon. So it is a marathon, and I think India is well poised, as well as, I think now when you talk of technology, India is always mentioned only second to US. China, of course, has surprised, but that is the whole joy, right? Unless you have good competition, good innovation happening across the group, we will not have the right solutions. So, picture abhi baki hai.
Okay. Barnik, what's your take on that?
So,
I mean, you are, as an investor, are you now excited about the whole AI?
no, I am very excited.
Also, just to add to what Keshav is asking, Barnik, in linked to what AI and the whole discussion around it is the issue of skilling. So I'd like you to comment on that as well.
Yeah, so listen, AI is a very exciting domain. India should not be afraid of AI. I think AI will create a lot of jobs in India. Even if we continue to remain the support factory of the world, which is what our IT services is, AI creates opportunities, right? And now coming to where are we on AI, China and the US have started the race. I think India is still behind the starting line. I haven't seen any quality technology in India come from a fundamental technology point of view. We are also inherently, I would say, inhibited because we don't have access to our own silicon. And silicon is going to be a very important part of the AI race. So again, will India create a lot of jobs in AI? Yes. Will we continue to support models built by other economies and other countries and serve them out of India? Yes. Will we be a leader in AI? I would not put my money on that today, right? Because I don't see neither the technology, nor the manufacturing, nor the silicon on that. Which brings us to the point of skilling, right? I think we have to be clear on what our skilling goals are. A lot of the focus on skilling rightfully is at the middle or bottom of the pyramid. But to be competitive in industries like AI, there has to be emphasis on skilling at the top of the pyramid also, right? I don't know whether we know, but some of the best AI research already happens out of India in some of our IITs, and the patents we see are of the quality which we see in Western societies. Unfortunately, they are all captured by the Microsoft and Google of the world, right? So there is a lot of high quality work happening, but is it benefiting Indian companies? Are Indian companies owning the technology and the patents? The answer is no, right? So I think the answer just suggests that we need to increase the volume. If we are producing 50, 100 patents a year, countries like China and US are doing thousands and tens of thousands. So I think unlike a lot of other things, there has to be more focus on the top of the pyramid, fundamental research, R&D. Because if you see all the advances, the way China has leapfrogged, the US and AI has been R&D. They've created R&D capabilities, and it's Chinese PhDs who are creating the new models, right? Will Indian PhDs create it is the real question.
But it is a marathon, like she said. And, like good cricketers who start off sometimes slowly, you start middling the ball and then hit it out of the park.
Yeah,
so
but that's not modern cricket. You have to get ahead of the run rate, right?
True. Vijay, you tell us, I mean, when we heard about, this whole DeepSeek story came out, the markets across the world just tanked, So if you are from a market perspective, what is your sense? How do you see this whole AI debate going on?
And I will tell you one thing, sir, because India has, NI in it. that is natural intelligence. Forget about artificial intelligence. And I will tell you, I will prove it. What
Like Mukesh Ambani said, apna buddhi bhi istemal karo, not only artificial intelligence.
Exactly. So why we are naturally intelligent, I will tell you. Remember in 1980s when I was in Kolkata, sir, and the computer was introduced. I remember in every nook and corner there used to be a protest. Then all this computer will take the jobs and all. And finally you see what happened. In 10 years from there, about 10, 15 years, we became the largest IT software exporter service provider in the world. This is what. So what I'm trying to tell you is this: Indians have naturally intelligence in it. Today we do not have any kind of AI in us, as like earlier that Preeti ji also said that we don't have that kind of education, we don't have that kind of degree, but this what happened in the IT services actually it makes me believe that maybe in 5 to 10 years we will catch up with the entire world and we will again be the leader in AI.
Vijay, I just want to add to that. So, in IT services, I mean, it's a big export generator for India. But with AI, and if you see the GCCs, they are not looking at an export story. It's a domestic story. So, is the IT services story over in that sense? Because if AI is going to, change the way businesses operate, so is the story over for good?
Maybe, I don't know. It's a transit. It is in transit. Maybe ultimately this AI will take over. So I won't say that it is over, but still it will take time. It is like IC engine and electric vehicle and all. They will run parallelly, and maybe after 5 or 10 years it will be migrated to AI. Maybe.
But you won't have any IT services in your portfolio.
No, I still don't have actually. Today also I don't have.
But you have cyber security.
Of course.
The other question now, I mean, this discussion around AI can, be a full panel and a session in itself. But let's move a little bit away from that and come to this. Barnik, I wanted to ask you about the recent announcement about the 12 lakh income tax break, which the finance minister has given, which has actually changed the narrative overnight, literally.
I think.
What I wanted to ask you is, given the fact that private investment is still, a work in progress, what is, do you think the government is now looking at looking at the middle class or the common man to also be participating in this growth story by giving this break?
I think the India growth story rests on the common man and the middle class, right? So there's no two ways about it. See the tax cut which has been given, I think you are journalists, you should look at the history. It's probably the largest tax cuts, middle class tax cuts India has received probably after the dream budget of Chidambaram, right? In the 90s, right? So it's nearly 30 years since a tax cut of this magnitude has come. The government has budgeted nearly 1 lakh crore of tax revenues foregone, which is money in the pocket of customers. So these are big numbers. Now, this is just, in my opinion, half of the story. The Indian consumers should feel confident enough to spend this money because once the money is in the pocket, the government doesn't want that to go to a bank account or go into equity markets, right? I think the government implicitly wants consumers to spend it, buy durables, buy FMCG products, maybe do some domestic tourism, right? So I think the belief is that this will happen, and this is an important impetus because consumption is roughly 55 to 60% of the India's economy, right? So this was needed. If you look at FMCG stocks, as you must have seen, their growth in terms of revenues over the last fiscal, at least the first half of the fiscal, was barely 5.6, 5.7%. Typically, FMCG outgrows the economy by 3-4%, right? If you see in any average year, last 5 years, FMCG companies have reported 10 to 12% revenue growth. So again, there were distressing signs that something was wrong with urban consumption, right? So I think the government has done a great job to fix that. Hopefully with people spending the money given to them, I think that's the big bet. You should start seeing private capital begin to flood into sectors like consumption-related sectors. And remember, there are lots of intersections. Consumption also ties with manufacturing. It utilizes manufacturing capacity. So unless there are international investors and FDI who are looking at manufacturing-led investments, that can only be supported by consumption. So I think it's a good start. Is this going to be all the solution to India's private capital challenges? No. We have to be more competitive. We have to do better on ease of doing business. So that itself is another half an hour discussion. But I think it's a good start, and we should see some good results being reported by a few FMCG companies and maybe domestic car manufacturers, where except for SUVs, there seems to be a slump in sales. Hopefully some of that picks up in a quarter or two.
Ritu, in the case of consumption, are we overhyping the whole story, considering that household debt as a percentage of GDP is already inching up? It's already 43%. And no one is talking about the fact that, the leverage has gone up quite high. So will this so-called tax break really spur consumption?
There are two sides to this coin. Yes, household debt has gone up. And as the other flip side, the savings has gone down. So we used to be a 40% saving economy. We are down to 20%. Now, is that good or bad? It's good, as he was saying, more towards consumption, which is much needed to spur the economy. And we've seen it in very large economies like US, even China, where the consumption rate outdoes the savings rate. So yes, there are many positives. Is there a social downside to it? Could be. But I don't think we are at alarming levels at this point in time to start worrying about it. Probably the benefits of consumption going up outweigh the challenges at this point in time, and it is healthy for the economy, and that is the only way we can achieve the growth rate that we are alluding to and desire to be a 30 trillion economy. Also, what it does by putting more money in hands of people is not just consumption in my mind. Research shows that when a middle class has a lease of liquidity, there's a certain kind of expenses or spending that goes up. Top on that is health, followed by education and tourism. So these are when you see globally, and we've seen China and other markets also, when you have liquidity in hands, and these are great. India always invested a lot in education. It's probably the biggest expense for any middle class or even lower middle class. They cut back on other expenses to educate the children. I hope this will mean a great impetus to financial inclusion, a great impetus to products like insurance, which I represent, but also mutual funds and other saving schemes picking up, which then goes a long way towards PPP partnership, nation building, investments, etc. So I think from all sides, this definitely helps. I have a young daughter who's super excited, and I can see it in her social circles, the excitement about having that little more money in their hand. And I think a large part of our youth, we are a young country, getting younger every day. And I think the beneficiaries are the youth, who are also great consumers as well as investors. So I would think the multiplier effect will be more than what is anticipated at this point in time. And this will go a long way as a very positive move.
So you don't see this whole personal loan boom becoming a problem area after this?
Not yet.
Yes,
so,
Mr.
Yeah, so I have my own perspective. I may be wrong about it. You see, suddenly overnight you can say that 1 crore people out of the tax net because of this 12 lakhs threshold limit. So out of 8 crore or 9 crore, whatever return we are actually filing, so you can say 15% people are out of the tax net. Second thing, if we see the world average, so world average of threshold limit, personal income tax threshold limit is equal to the per capita income of that country or below that. So India is having 5 times then, like suppose if our per capita income is $2,500, yeah, so we are 4 times, 5 times more than the threshold limit. It's a great risk, I think, that India finance minister is taking. It's a big, very big risk we are going to take. And in my personal opinion, I don't think that just this is going to help us to reach to that Amrit Kal or whatever, Viksit Bharat and all. Because we should not forget that we need 1 crore new job we need to create every year. Year on year, we need to create 1 crore job. And besides that only, whatever new jobs, because of the old jobs, I remember one company, I read one interview, that an NBFC is saying that they have some 5,000 people in their company, and now they are using AI. And because of this AI, maybe 5 years from now, they will keep on growing 20-30% year on year. But maybe after 4-5 years, they will just require 300-400 people only. And rest of everything would be done by the AI, whether chatting with the customer, checking their CIBIL score, and disbursing the loans, and all those things. So all those jobs have to be filled. So I think India is on the verge, in a very sensitive stage where just tax rebate is not going to solve our problem. Creation of these crores of jobs are actually going to solve our problem. I don't mind paying more taxes, but I need to have income.
That's very well put, Mr. Kedia. Barnik, what are your thoughts on the whole jobs challenge? I mean, one part is the tax rebate. It's giving more money in the hands of the people. But where are the jobs?
Yeah, I think India needs to create probably 10 crore jobs a year, not just 1 crore, right? If you look at really where we need to get to. See, jobs will get only created if there is investments into capacity creation. One of the things which we look at very carefully is not just the jobs which get created, but the quality of the jobs and the wage of the jobs which get created. And one of the slightly alarming trends I've seen, we talk a lot about manufacturing growth and the fact that Make in India has been successful. But if you look at the share of manufacturing value add to that of the GDP and take a decadal view, right? We were close to 16% in 13-14, and we are barely 15% today, right? Which means if you look at the value add of manufacturing in the context of the full economy, we are actually adding far less value today, at least 1% less than we were doing a decade back, while we've created a lot of jobs, right? So the emphasis is not only on the volume of jobs, but also the quality and the pay and the disposable income which you put on top of the jobs, right? So I think in an ideal developed economy, the threshold for paying taxes should be half or 1/3 of the per capita income, not even equal, right? Whereas we've actually moved in the other direction, which is, I believe, a temporary fix. Now, jobs, in my opinion, is a multidimensional problem. I think it can't be solved in the budget. We as Indians have an unrealistic expectation of a finance minister to deliver magic bullet after magic bullet in a budget. If you live in any developed economy, a budget is a very boring statement of taxes, but everything cannot come in a budget. So I think we have to again take a strategic relook at everything we are doing. It's not just about subsidies or government programs. If only we can get back FDI in the country, and we've had the worst, I would say, 3-4 quarters of net FDI growth, right, where we are actually marginally negative, right, which means people are pulling money out of the capital of the country rather than putting money in, compared to 4-5 years back, where I think in 1 month, I think it was August 2019 or July 2019, there was $20 billion of FDI in 1 month. So again, jobs can be created only if private capital comes in. Private capital comes in only if there is competitiveness, ease of doing business, plus workforce who's skilled and competitive enough to deliver, right? So I think all of these problems are reasonably hard problems to solve and cannot be solved. Forget in one budget, maybe 3-4 budgets also can't be solved. So we have to take another decadal view to see what is needed to solve this problem.
Barnik, just to add to that point of FDI, do you see the space of FDI? I mean, though the absolute number seems to be huge, but in terms of percentage of GDP, it's not as good as it ought to be. And also the other thing is that a lot of FDI could also be coming in as M&As. You know, so there is no fresh asset creation, and PLI was supposed to be that one magic silver bullet, or you call it, which would deliver that thing, but it doesn't seem to be working. So what's your take on that?
No, see, FDI, as I said, right, at our peak, we were doing nearly 1.5% to nearly 2% of GDP as FDI coming into the country. I think that number is probably now under 1% today. Again, the economists here can crunch the numbers. A lot of people believe that we should be able to attract at least 3-4%, if not 5% of our GDP as FDI, and the math is pretty straight. If you have a output capital productivity of 3-4 times, you can do the math and see what the GDP growth is, right? If you work backwards, that itself should propel us to an 8-10% trajectory versus the 5-6% trajectory. Now, if you look at investors and ask them, and I talk to several people, and I am an investor myself, I have a challenge of finding fundamental quality assets in India for 2 reasons, right? One, either they're too expensive because they're large branded assets owned by conglomerates where the entry valuations are very rich. They're in the late 20s, early 30s, sometimes the 40s and 50s. Then all you have to bet on is that the earnings grow disproportionately, which is a hard bet to take over 5-8 years. Or they are very cheap assets in industries where you're taking a lot of risk on the company surviving beyond 3-4 years, right? So I think we need to think a little bit about what to do. I think the government's emphasis on boosting the MSME sector in this budget is welcome, because a lot of investors want mid-market assets, right, which they can invest in at 8 to 10 kind of earnings in private markets, take them public. And in India, by the way, we have the best IPO market in terms of valuations, right? So in the absence of a mid-market, you won't see a lot of investors come in, right? And so again, if you have to get to 5% of GDP as FDI, we have to support the mid-market. We have to ensure they are successful. And maybe there has to be a relook at the way we are trying to create national champions and make that a far more democratic exercise than limiting it to a few conglomerates.
That's a very, very valid point, Barnik. But Ritu here is delighted with the FDI announcement in the budget. Ritu, would you like to talk a bit about that?
It is important that we are seen as an economy which is fair and provides equal playing ground to everyone to participate in. I think we have very few sectors like insurance which were still restricted. So it is very welcome that we open that as well to 100% FDI. What it does, it gives a lot of confidence to investors for FDI organizations. It not only brings capital, it gives confidence for best practices, innovative products to come in as well. And I think overall it will benefit. For our size of economy, we have about 25 players in each life, general insurance and health, which is a fraction of what one would expect them to be. And I saw statements from my colleague Tapan, who was saying he would not be surprised if there are 1,000 players going forward. And that is what will, that is a big number, but what I mean is that is the kind of growth, and that is what will take insurance and other financial products to the last mile. And each one could have a niche solution. So it is extremely welcome. It was a necessity more than anything else. And I think with that ticked, we should see a lot of innovation following. Yes, I very much welcome it.
Vijay, what's your take on PLI? I mean, how do you see the rub-off effect on the stocks? And do you regret not having Dixon? Because that emerged as the poster boy of, contract manufacturing.
No, I don't have any regrets, let me tell you. And not at all about Dixon, because I had read this thing earlier also. I know that the kind of, whatever Dixon is doing here in manufacturing and all, if you will see the valuation of all such stocks in abroad is not more than, they are running on thin margin, 3-4% and all. And their P ratio is not more than 10 or 15 or 12 or even 8, in abroad. Here in India, they are quoting at 40, 50, 60. I don't know what kind of P ratio they are actually commanding in the market. So for me, those are just to pass on things. I would not invest.
On the context of PLI, how do you see that, creating wealth? I mean, stocks can expand, the multiples can go up, but beyond that, how do you see the impact of PLI on the economy?
So far, because even let me tell you, PLI is not that, hasn't brought that kind of result what we had been anticipating, what we had been expecting. That so far that result has not yet come. So let us see, only PLI is not going to solve the problem, as the economic survey also says that until unless you ease of doing business actually improves in India, so far all these schemes and policies will have a lesser impact.
I think one question which I wanted to ask Vijay ji is, Barnik spoke about MSMEs, and the budget has been very, positive in terms of what they wanted to do for MSMEs. You are an investor in some of these, SME kind of stocks, and which have yielded huge returns. One of them has, yielded massive returns, the cybersecurity one which I spoke about. What is your take on the kind of potential which the MSME sector has, and their entry into the public markets eventually?
No, I'll tell you, there are maybe, 600, 700 stock listed on SME or something like this. I have invested only in 3, let me tell you. Because just listing is not going to help you. This is what nowadays it has become a trend that, okay, I just want to list my stocks on stock exchanges. So SME is just a platform, is a route, is an easier route to get yourself listed in the market. But that is not going to solve ultimately what they are. Corporate governance, actually, who are going to teach all these people, newcomers, about this corporate governance and the valuation and all. So if you ask me that majority of in these SMEs are actually, it's all trading kind of things are happening. We used to call it satta, or, or this gambling kind of things are, happening in this market. there is a time, or in this the same market, companies like United Breweries are listed, Radico Khaitan is listed, which are pure play alcoholic manufacturing company. At the same time, a bar from Goa, Tito's, is coming and telling that I am also going to list my share, the 1,000 crore of valuation. So just imagine where we are going, what direction we are going. So just because there is a platform, that does not mean that all these companies have got license to list themselves on the stock exchanges. But ultimately, how they are going to utilize their money, how are they going to return the money to the shareholders, all these things are questionable. So when spring is there, all the flowers bloom, but ultimately you will see later on what happens.
Barnik, just before we sort of run out of time, wanted to ask you about this whole ease of doing business debate. I think that has also been addressed in some part by this budget in terms of announcement of creation of a committee to look into some of these problems and come up with solutions. The ease of doing business and this competitive index of states, I think that's another interesting move. What are your thoughts on that? And we'll ask Ritu as well.
No, see, I think the challenge I have with the ease of doing business approach the government has is a very incremental approach, right? If you look at even the budget announcements, they will announce that there are 7 laws we are scrapping, we are setting up a committee to do X, we are setting up a committee to do Y. I think we have to set our standards far higher as to what we want to do, right? If you look at Singapore, where I recently invested in a company, right? I think you don't even worry about what you have to do with the government, and everything is seamless and done well. So in terms of ease of doing business, I think we have to take a completely different approach, right? And create much more faster highways, right? For maybe a select group of industries or players first and then expand it, right? Where you look at all the plethora of approvals and the compliances which are needed, which in India can run into hundreds of approvals and compliances, right? Which in my opinion, we had done the math for a solar company I was looking at investing, and I did invest, right? Is roughly 2-3% of revenues are spent in complying with the law in India, right? Forget about the revenues, it's the amount of management bandwidth, attention, the rent-seeking government officer who shows up, right, if you start doing well, is the penalty of doing well, right? If you don't do well, that's fine. If you do well, there are many rent seekers who show up and they say that I'm here from the government and I'm here to help, which Reagan said was the most dangerous of 7 words you can hear from a government official. I think that is a real problem. So it's cost, it's time, it's bandwidth, and the government has to say that, listen, we have to scrap everything going forward. I think this is where I think comparative federalism comes into play. I think one of the things which India has done well over the last 30-40 years since liberalization is that there are various states who believe that they can compete for investments, right? And some of these states have done better than the others. If you look at some of the southern states, right? And again, I keep on using Tamil Nadu as an example, right? Because it's got one of the most investor-friendly climate, right? There is a reason why people invest in Tamil Nadu is because of the lack of red tape, the ability for government officials to problem solve along with businesses, right, on what to do. And if you remember, again, this is another story which you guys would have covered. Ford decided to pull out of Tamil Nadu, right? Nothing happened to them. The government came and said, how can we help you pull out? And in 3 years, when they changed the strategy and they said, listen, no, we want to continue to be invested in India, and the same government again welcomed them back, right? So it's a good measure. I think we can get our states to compete harder for investments. It will be better. But again, to support that, I think we have to also look at the tendency to centralize a lot of powers and funds. So you cannot do comparative federalism while you're trying to centralize. So there's a little bit of dichotomy there which we have to address. But maybe the solution is that we federate company regulation and policy to the states completely. And if you really want to have minimum government, there should be no role the federal government plays in companies other than just collecting taxes on time and ensuring that tax code is enforced.
Ritu, your closing thoughts on this?
Sure. I would add to what you say. I think ease of doing business is a burning need. What we have done so far was necessary but not sufficient. And it goes beyond, depending on which sector you're coming in. It's very difficult still for foreigners or multinationals to come in and set a shop and start manufacturing, selling services, whichever sector that is. It is fairly complex still. And here I would think it is just not policy and federal support, because each state is different, each sector is different. I think there's some pillars which need addressing as well, which is judiciary. Tenability of contracts is pretty important for ease of doing business, to know that when you bring in money or make an investment, you'll have a fair option to enforce your contracts. Second is regulations, stability of regulatory regime, not frequent changes. Many a times that completely erodes confidence, and this is something that the government can fix. Labor. So labor laws need significant reforms in India if it has to be easy for people to come and set businesses. So I think these are some judiciary, legal, as well as regulations which need to also be addressed to make it easy to do business in India.
Vijay, today we are sitting at 5+ trillion in market cap and our economy is 3.5. So if you take a rough estimate, where do you think by 2030, which will reach faster, which will double? The economy or the markets?
Maybe
Because
maybe market.
And is it a good thing or a bad thing? Because then that talks about a lot of froth in the market.
Froth and all these things are part and parcel of, because market, moves on future. If what we are really discussing about all this $1 trillion, Viksit Bharat and Amrit Kal and whatever, if those things are in sight and we really get to see that vision is clear, that okay, we are going to achieve maybe, if not on this year or if not in 2030 or 2031, market had that kind of, patience to discount those things, So I think, or not only because of that, because all those retail participation is going to take a market to another level. So I think market will move faster than the economy.
Vijayji, we've come to completely run out of time, but I know you are a poet at heart and a singer, so we cannot let you go without asking you to, tell us a few of your thoughts in terms of a verse or a song or whatever you choose.
So instead of a stock idea, you can give us a song. और उसमें आप clues भी दे दो कौन से stock को देखना है.
So I will recite a 4-line poem, okay? That विकसित भारत के अमृत काल में भारत की हुई एंट्री है, तेज गति से बढ़ने वाली ये नंबर 1 कंट्री है, खुशहाली समृद्धि के संग स्वाभिमान कॉम्प्लीमेंट्री है, 4 साल में टॉप 3 में होंगे, हम सबकी गारंटी है.
अरे वाह वाह. On this very bullish...
Maybe I add a line there.
Yes.
And this is a line which rings in my head many a times. I'm responsible for Asia Pacific, so I see a lot of the countries around us. And this used to be an ad when I was younger, and I'm sure many of you would remember. It is owner's pride and neighbor's envy. I think that's where India is today. It is neighbor's.
I think Barnik, you should also say your lines now that everyone has given lines.
No, but there was a Shah Rukh Khan song, I'm the best, right? I think we should be singing in 5-6 years that we are the best. I think let's set our standards higher, right? Let's not compare ourselves to our neighbors, which often is the tendency, right? We will have 2 shining lights in front of us, the US and China. Let's be globally competitive versus that, and that should be our guiding star.
So it's a very bullish note, but if anybody wants to ask this wonderful panel any questions, please raise your hand. So lots of hands. We'll quickly take a few questions.
No stock ideas from Vijay.
Hi, maybe more an investment-related question. I was surprised to find out that the general economist opinion is moving towards that China is reinvestable again. And it appears that the PE ratios in China are 10, and in US and India is at 22 on average, and US is at 23. I am very intrigued because as we plan Viksit Bharat and we talk about being globally competitive, China with BYD, 100 billion is kind of the valuation of BYD, and it sells more cars than Tesla. And Tesla is at 1.2 trillion. So what's the general comment? Is China reinvestable again, and do you see an implication on Make in India as a result of that?
I can take that. I think the multiples in China, not even 10, they're 7, 8, right? So China looks very reinvestable, right? I think the only risk with China is geopolitics. There's no other risk. See, I have spent the last 5 years looking at manufacturing in China, and it's jaw-dropping and unbelievable, right? The scale, the quality, the technology, right, and the productivity is something which no other country has today, right? So I think if for China there are only two ways out, right? Either they can get back into the world order and be a disciplined team player along with other leading economies, or they can choose to take the path we are taking now, right? At which point of time global capital will not flow into China. So for us, I think investors, we ask the question back to Chinese regulators, what kind of China do you want to build, right? But it is quite attractive to invest in China just from a valuation upside, from where they are today, right?
Ritu, you would like to add to that because you also invest.
I would only say it would be naive if we took our eyes off China and start believing that we are the next. It would be really naive. It's a very strong economy. Has been on its knees last a few years. They still have some structural problems, but I would not write it off. There's inherent strength in the economy, and so we would be smart to keep an eye out.
Yeah, I would like to add something about China because I'm very excited. I have recently invested in Chinese ETF. So I may go wrong also. No, ETF, I will tell you.
ETF, yeah.
So, in my view, China is the first wonder of 21st century. What BYD, you have taken so many times the name, it's the fifth largest company, EV company in China. Okay. And this year, China is going to export 6 billion electric cars in the world. And the average price is $18,000. Whereas, European car costing $40,000, double than what Chinese are selling at. And that is why there is a recession, there is a thought in China, in European country when they impose taxes, custom duty, they raise custom duty on China and all. You know, I will tell you another example. Our education budget is some $12 billion. China is spending $800 billion on education and all. So let us not compare with China and all, because to catch up the current momentum of China, Indian GDP has to grow by 25% Y on Y, because $18 trillion and $4 trillion. Yeah. So there is no comparison. Now coming to your point, China Hong Kong index in 2008 was some 34 or 35,000. You know, and India grew 12% CAGR, Indian index after 2008 or whatsoever, but that you know better. And now China one share, whatever they call it, it is at 20,000. Forget about the CAGR, which we should calculate, then it should be at 1 lakh and all, you know. So I think China, I have invested in China. I don't know whether it is a good investment or not. You know, because, yeah, it's a closed economy also. You never get the real data also. So there are so many flip side of it. So if you have that mindset that if you invest in China, that money may not give you any return and all, then you should take that risk.
So, sir, I have a question for you. Like in this recent budget, what the finance minister has talked about, that till 12 lakhs, you'll be exempted from paying any income tax. How do you see this in the pretext of the fact that this money which the investor would be saving would be circulated back into the capital markets in India, as a result of which the domestic investors or the proportion of the domestic investments, the DIIs and the retail investment participation will go higher. And at the same time, the FII's contribution will get lower in times to come. How do you see this change which has come with this budget to come up within the capital markets in India?
I just want to add to that. In this year, the FPI have crossed 2008 levels by a factor of 1.5. And the Sensex or the Nifty is down by just 1.5%. So is that a sign of resilience, or are investors getting shortchanged by FPI sales? FPI sales. I mean, all the money is going to absorb the FPI selling, and there's no fresh money.
No, I don't know about. I have my own skepticism. This 1 lakh crore actually is not going to whatever savings. 1 lakh crore is the savings, right? 1 lakh crore is the savings.
1 lakh crore of the tax foregone.
ठीक है, तो 1 लाख करोड़ सारा का सारा तो कोई शेयर बाजार के अंदर में भाई आने वाला नहीं है. As it is, we are getting 25,000 crore every 25,000 crore आ रहा है.
In the form of new SIPs. Yeah.
हाँ, 25,000 को म्यूचुअल फंड में जो भी रिटेल पार्टिसिपेशन आ रहा है. But let me tell you, not necessary that money will come into the market. You ask what is the performance of these retail participations? Mainly who had joined this market in 2024?
Correct.
You take their balance sheet, you just, you see their balance sheet. So most of the retailers, first-timers come into this market, let me tell you bluntly, rudely, to lose money because they don't have that knowledge. If you're investing directly in the market, that means you have to pay, you have to give a toll here.
So my question is that do you see that the landscape of the Indian markets, which compose of FIIs, DIIs, that's going to change where the tilt will be more towards the DII contribution, specifically when an individual or an Aam Aadmi will be having more and more money into his pocket?
No, this 1 lakh crore, you want to...
Let me just say, I hope not, right? Because I think it's not good news for us is that the FPI share is going down, right? Because at the end of the day, there is only so much consumption which can drive investments into the country, right? So while there will be a temporary stimulus from domestic investors, I think the bet everyone is making is that FPIs, FIIs and FDI will be back again based on this, right? So yes, there is a change. Is that change good for us? While we may feel very nationalist that we have more domestic investors, right? But nationalism is not going to make us a developed country. I just hope that this actually crowds in more investment from outside, right, than having the opposite effect.
Okay, fair enough, sir. Thank you.
My name is Poonam Mutreja. We've been talking a lot here and in the media, the response to the tax relief. Is it really the middle class tax relief? One question. Isn't it lower middle class tax relief? Except some of the younger people who are beginning to earn. And this fraction of people have already, there's a huge credit, retail credit, that they're going to be paying off for EMIs and loans. Nothing much is left for the consumer goods purchases, I believe. And second, this is again, as Ritu said, they invest when they have additional money in education and health. But health costs and education costs are so high that health, especially catastrophic illnesses, bring them back into poverty. And finally, I'd like to hear from this panel, you're talking about China. China invested in education and health, as you rightly gave the figures for health investment. India invests woefully low compared to any country in the world, 1.5% in health. Look at our workforce. Do we have a workforce that is healthy with 60% anemia and going up? Malnutrition is going up amongst men also, not just women. I don't know how we can look at India's future so divorced from human capital of large majority of the people and in talking about investment in human capital.
Quick comments on this from anybody.
No, let me just take the middle class point. I think in India it's difficult to define the middle class today because the last time we had a census was nearly 14, 15 years back. I believe this is a reasonably democratic health tax cut because it affects both people who are earning 8-10 lakh rupees. Yeah. But the maximum tax benefits to people who are earning 24 lakhs, right, and above, right? They are actually getting 1.1 to 1.2 lakhs tax credit, right? So I think there is a lot of money which the government is putting. It will affect all strata of the middle class. I would say starting from the lowest end to also the reasonably high end, because a 1.1 lakh immediate tax benefit, right? Someone was joking to me is that if you're earning 15, 16 lakhs, right, you now have money to buy another iPhone, right? So I think a lot of the money, I think we should look out for iPhone sales next year because a lot of this tax may get spent by the youngsters on buying the new iPhone, right? The question is this enough, was your question, right? Obviously it's not enough, right? We have to spend on education, we have to spend on healthcare, right? In fact, one of the more alarming trends is that the spend on healthcare as a share of GDP is actually dropping for the last 3-4 years, right? I think it's dropped from 1.5% to close to 1.25%, right? Which is alarming. I think the other interesting thing is that private investment in healthcare has also not happened. So again, these are big problems to solve. We don't have the fiscal room like China to spend a lot of money in this. So I think let's be pragmatic of that. It's a tightrope to walk because one of the things which will fundamentally change our economy is a credit upgrade, which can only happen if you are fiscally responsible and can bring the fiscal deficit below 4%. So I think we are spending
think
as much as we can, but we can spend
That
more.
is the path I think the finance minister has made clear that she's going to be on, right?
No, I think it's the right answer for India, right? Because we've seen in previous governments that whenever fiscal stimuluses have been given, and you can look at the data from 2008-9, the moment you remove the fiscal stimulus, the GDP collapses by that same amount, right? So nothing permanently happens other than affecting the credit quality, right? So this is the path we have taken. We cannot afford to spend so much money on education and healthcare till we have better economics and better financing. But I think the private sector needs to step up. Everyone needs to step up and contribute, and not the government only.
Maybe I'll add, a finance bill is not the panache to all of India's problems, but this is a step in the right direction. And India's story, as we discussed, there's structural things that need to come together to make it the economy that we foresee in 47 at 30 trillion. So there are many things that have to come together. But if we look at it as a glass half full or half empty, which it is, I fall in the camp which sees it half full rather than half empty. And hence, I put my bet on India reaching there. As I said, it's only a matter of when, not if. So it's a glass half full.
So it's a glass half full and bet on India, and I think we are on the road to Viksit Bharat. When and how we will get there as quickly as possible is something which remains to be seen. It's not a sprint, it's a marathon. So these are the final comments, and wonderful to have this stellar panel sharing their thoughts with us this evening. Thank you very much for being a wonderful audience as well. Thank you.